Hello, my name is Julien Nillon. I am a financial analyst and the founder of LPE Research, an independent equity research firm exclusively dedicated to asset managers and specialized on French small caps. All week, we have been working on the company Solution 30, and today I am going to present our first analysis on this stock. Before I begin, I would like to remind you that this video is not an investment advice, but only an opinion. We do not have any business with Solution 30 and we do not hold any long or short position on its stock. Having said that, let's get started. Solution 30 is a true and extraordinary success story. Over the last 15 years, its turnover has increased 15 times and its net profit 20 times. Originally, the company specialized in the installation and maintenance of personal computers and internet connection in France. But smartly, Solution 30 positioned itself on the booming fiber optics markets, but also diversified into the installation of energy meters and internationalized its activities. Beyond the growth of its market, this success has been achieved by positioning itself as a very competitive subcontractor, a position made possible by a high level of cost control and an active management of its employees. Finally, the group's accelerated growth is due to an active M&A strategy based on the low price acquisition of activity considered non-strategic by telecom operators. Unfortunately, sometimes to have a lot of success can lead to suspicion. And that's what happened to Solution 30. All started in May 2019 when Muddy Waters, a famous short seller fund, announced that it was shorting the stock. In March 2020, like the market as a whole, Solution 30 suffered another blow due to the COVID. The rebound will nevertheless be very strong as the crisis pushed for the acceleration of the fiber optic installations. In December 2020, the stock fell back, following an anonymous publication accusing the company of having multiple links to persons with criminal conviction related to money laundering. Finally, in May 2021, the stock suffered another shock after its auditors, EY, declared that it couldn't certify the 2020 accounts. Solution obviously refused all this accusation and changed its auditors, but the damage is done. Solution 30's reputation is destroyed and will not recover tomorrow, in our opinion. Indeed, all that due to its aggressive cost and HR management, the company suffers from a relatively poor reputation as an employer, something you can see on Glassdoor, for instance. This is reflect on the overall reputation. In addition, despite strong rebuttal of the accusation made by the short seller, the company has not managed to remove all doubt about it. In particular, the non-certification of its account by EY has seriously undermined its credibility. Finally, Solution 30's reputation suffers after threatening the French Association of Financial Analysts, which wanted to have a meeting with Muddy Waters. At the end, to quote Warren Buffett, it takes 20 years to build a reputation and 5 minutes to ruin it. Now, having said that, could Solution 30 still be a great opportunity? Let me explain. In December 2020, before the publication of the anonymous report, Solution 30 shares were trading around 20 euros. At that time, consensus forecast for 2020 was for a 20% increase in revenue and 4% increase in EPS. Today, the stock is trading around 9 euros, and we expect 2021 revenue to increase by 14% and adjusted EPS by 36%. For 2002, again, the consensus forecast of a revenue increase of 11% and EPS of 40%. Assuming that the company's poor reputation and stock discount remain stable, should the stock rise simply because of earning growth? Unfortunately, we do not think so. And for one very simple reason. We fear a decline in organic sales and profit in 2022. Solution 30 is a service company, but only 60% of its activity is considered as recurrent. The activity of deployment and installation of energy meters and fiber optic are not recurrent by definition. According to our estimate, the deployment of electricity meters and optical fiber in France should represent more than 120 million euro in 2021. The fiber optic connection activity will represent nearly 250 million euro. The group growth in recent years is largely due to this activity in France, but we expect them to fall in 2022. Indeed, deployment of fiber optic and smart meters are coming to an end in France. To understand why, you need a bit of history. At the beginning of 2013, the French government defined a very high-speed plan to connect the whole territory to the optical fiber over 10 years. Similarly, in the energy sectors, in 2015, the French government launched a plan to deploy smart energy meters to cover more than 90% of the territory within 6 years. But after several years of exceptional investment, especially in 2020 and 2021, these plans are coming to an end. By the end of 2021, we estimate that 95% of homes will have access to fiber optics, and 90% of homes will have smart meters. Therefore, in 2022, we expect a spectacular decrease of 80% of deployment activities. To cope with the end of the major investment plan in France, Solutions 30 is counting on these growth relays. First, in Telecom, the group should indeed continue to benefit from an important flow of revenue linked to subscriber connections, maintenance and 5G activities. In energy, the group hopes to benefit from the deployment of electrical vehicle infrastructure. Above all, Solutions 30 has a significant growth potential in other European countries, lagging behind France, especially in fiber optics. This should allow to recover growth from 2023, but in our opinion, this will not be enough to absorb the shock of 2022. One good news is that Solutions 30 is aware about its intrinsic cyclicality and its businesses and has set up a very flexible cost structure. At the end of 2020, out of 11,000 technicians were working for the group. Only 7,000 were employees of Solutions 30. The remaining 4,000 were freelancers. This structure should therefore make it possible to absorb a large part of the decline in revenue that we anticipate in 2022. However, the operating margin and EPS should still be impacted, given the fixed cost, but also because France currently has the best margins. For 2002, we expect then a 30% drop in EPS, while the consensus is for a 40% increase. When it comes to valuation, two elements must be taken in account: the company reputation and its actual profile. As we have seen, Solutions 30 reputation is not expected to improve quickly, and a particularly high risk premium should be then factored in to the valuation of the company. Beyond the growth, the valuation multiples must also integrate the cyclical component of the company. The year 2021 should correspond to the top of the cycle. Thus, it seems difficult to us to value Solutions 30 on an EBITDA multiples of more than 5 times and a PE of more than 12 times for 2021, the top of the cycle. Similarly, we believe it's appropriate to apply a WACC of around 11% for a DCF and an exit EV on EBITDA multiple of 6.5 times. In the end, with those multiples, we value the stock around 5.5 euro in a first approach. That's it for today. I hope you have enjoyed this video. If you like to know more about our opinion, you can contact us and order our first analysis pack that include our presentation, our forecast and valuation model, our stock reputation measurement, and allow you to discuss with me. In the meantime, do not hesitate to subscribe to our YouTube channel or to visit our website at lperesearch.com. Thank you very much and see you soon!